Our Bloomberg Best top currency forecaster says Japan's efforts to rein in the yen with intervention will fail. Shaun Osborne is chief currency strategist at TD Securities. He's had the most accurate forecast for the last 6 quarters, and he's joining us now from our Toronto bureau. So, Shaun, let's talk about what's happened with Japan here. Obviously, the country has come in to try and do some intervention to keep the yen low, and it has worked to a degree thus far. Why don't you think it's going to continue to?
Well, I guess it depends on how you define success. I think they've managed to stabilize dollar yen at around this 83, 85 range that we've been in over the past couple of weeks. But really to, I think, define success, you'd have to get it back to dollar yen back to levels where domestic exporters in Japan will be more comfortable, and that's probably north of 90 yen at the moment, and that's probably going to be a hard task at the moment, we think.
And why is it going to be difficult? If the government comes in and it's selling yen, why isn't that going to be effective?
Well, on the one hand, we have Japan trying to push its yen down. On the other side of the coin, we have the US, which is appears to be, at least at the Federal Reserve's level, moving towards the potential for more quantitative easing. So we've seen a huge decline in long-term and short-term yields, in fact, in the US over the past couple of months. Just since the end of July, for example, 10-year rates have fallen by close to 50 basis points in the US, and that's had a very severely depressing effect on the US dollar. And we think that, combined with the efforts of Japan to try and push the yen low, effectively is going to cancel each other out. We won't see any significant move in the yen rate, we think, from around this 85 point until we see a significant move in the interest rate differentials. And
when might that happen?
Well, I guess that's the $64,000 question. A lot hinges obviously on what the Fed does later this year. As I said, 50 basis points of declines in 10-year rates. That suggests to me that a lot of quantitative easing risk, if you like, is already factored into the US curve and potentially into the US dollar here. So if there is a window of hope for Japan, perhaps it is that we perhaps get less QE coming through straight away, or the QE announcement is perhaps delayed until early next year instead of November, when most of the market seems to be looking for an announcement. And then there's an opportunity perhaps for the Bank of Japan to intervene with the wind, as they say, and actually intervene and buy into a rising dollar market. That could give us quite a decent bounce. But if we do get QE, that seems to be certainly the way the market is thinking at the moment. If we do get more quantitative easing, that is going to keep long-term interest rates in the US down, and it will keep the dollar generally under a fair bit of pressure.
And how is the dollar then going to do against the euro? Are we going to see the euro gain against the dollar further? Because, as we know, there are some concerns about what's going on in the EU as well.
Well, that's right. We've had to adjust our forecast recently. We were quite bearish on the euro earlier in the year, but given the risk of more quantitative easing come through, we have to recognise the potential for, at least in the short run, the euro to appreciate a little more here. Given the way interest rate differentials again have moved over the course of the last few months, we reckon there's potential for the euro to rise to around about the 140 point over the course of the next couple of months. At that point, it's going to start to look a little rich, though, I think, because these issues that we have at the sovereign credit level, at the systemic level within Europe, are still, I think, very much on people's minds, on investors' minds, and they're not going to go away easily. So beyond 140, I think the euro will start to look a little rich. I don't see the euro dollar rising much beyond 140 to 145 over the course of the next, well, into the year end, essentially. And beyond that, I think the focus will start to swing back to Europe's problems, because a higher euro essentially compounds the adjustment process, makes it more difficult for those economies that are struggling to grow at the moment to grow and to get their budget deficits back on track.
Shaun, we're out of time, but thank you so much for sticking around.